Hi everybody, Jeff Yastine here. As always, make sure to subscribe to our YouTube channel. And I'm always posting ideas on my Facebook and Twitter platforms as well. With that in mind, I wanted to bring your attention to a video I first posted here October 16th on YouTube about a Chinese company, ehang, E-H, the leader in passenger air taxi drones. And I tweeted about it a number of times and I've mentioned it on my Facebook page. Hopefully you took aim at the stock before Friday because that's when the shares really took off, forgive the pun. ehang stock soared more than 25% on Friday morning session. And the reason is because the company, which is based in China, held its first ever test flight demonstration in South Korea, the latest of many such demonstration flights it's held in recent months. ehang expects its passenger drones to allow what it calls urban air mobility, giving people the opportunity to quickly move around crowded metropolitan areas where, let's face it, surface roads and public transportation options are increasingly congested, as well as being difficult and expensive to expand. So ehang makes what it calls AAVs, or autonomous aerial vehicles, that can carry up to 2 human passengers. The company's begun holding demonstration flights of these all-electric drones. And you can find videos of these on YouTube. You step in, close the hatch, power up the flight controls. ehang's command control and flight guidance systems do the rest. No pilot's license necessary. Quite extraordinary. According to the company's specs, its main flagship model, the ehang 216, can carry 2 people, 485 pounds total payload, and fly them at a top speed of up to 80 miles an hour with a maximum range of 22 miles. So the main cockpit or capsule is about 6 feet long from propeller to propeller. So it has about an 18-foot wingspan all told. Now the company's run more than 2,000 flight tests in all kinds of weather conditions, and it has begun holding demonstration flights outside of China. It even had one in the US early this year, holding a demonstration flight for the governor of North Carolina. ehang has also run similar flights in Dubai, Vienna, Canada, and elsewhere. The company also has autonomous drones for other uses. For instance, it recently debuted a large capacity freight hauling drone. Now, compared to others I've seen in demonstration videos from other companies, you don't realize how large the one that ehang makes is until you see a human standing next to it. ehang also recently demonstrated a firefighting drone that might be used in tall buildings someday, where it can spray fire retardant foam or launch special canisters that break open inside the building and release a fire-killing chemical agent. Now, some things impressed me about this company, even though it is a development stage firm. It recently announced or named a new independent director of its board, the CEO of DHL Express China. Now, DHL is a large global company and a competitor to UPS and Federal Express. So to me, that demonstrates a serious approach to using drones for deliveries in China's crowded cities, and maybe a potential partner for that business down the line. ehang is also reporting sales revenue. So according to its PowerPoint slides, in the second quarter, it sold 25 of its flagship passenger air taxi drones in the first half of the year. That's a near 50% jump from the same period a year ago. So with those deliveries, ehang is reporting sales revenue of $21 million in the first half of this year, and it appears on track to hit $60 million by the end of 2020. There are also 4 Wall Street analysts, including one from Morgan Stanley, who cover ehang. Again, I take that as a good sign. And their estimates show a belief that revenue could accelerate to as high as $290 million in the next 2 years. Now, many things would have to go right. I mean, with the pandemic being resolved, not to mention regulatory issues, political and economic issues, for all these things to happen. But it certainly shows the promise. And the hard part for any company is, of course, delivering on that promise. So although the company has only reported losses thus far, as you might expect, given the very early stage of the game here, there's at least some expectation that the company might even report its first ever profit of 8 cents a share in this final quarter of the year, rising to 63 cents a share next year as drone production ramps up. Now again, all this comes with a lot of caveats. Ehang isn't even cash flow positive yet. But then again, according to its balance sheet, it only has a small amount of debt, which is good, and its gross margins are around 60%. What that means is that every time the company makes a sale of its drone, it's keeping 60 cents out of every dollar. That's a promising sign. Anytime a company can generate a fair amount or have the potential to generate a fair amount of cash with each sale means that much less cash it has to borrow from the bank or from its shareholders, and means it's that much closer to becoming a profitable company. So as we take a look at ehang stock, you can see the company went public late last year. It was trading until Friday and the recent handful of days before that between $8 and $14 a share. And the stock was held back for a number of reasons over the past year. It's a Chinese company. Chinese companies and foreign stocks in general have been largely out of favor. And of course, ehang is also just largely unknown to U.S. and global investors. Most don't even know that these full-size passenger drones exist and are ready to go now. So development stage companies like this always carry more risk, but there's also the potential for larger rewards as well as awareness spreads about these air passenger drones, and that continues to grow, and regulators in the U.S. and elsewhere begin to change their flight rules to make these advanced drones a routine part of air traffic above America's cities. If you like what I'm talking about, make sure to follow us on YouTube, follow me on Facebook and Twitter. I'm Jeff Yastine.